When a company trades in foreign currencies, either with customers or suppliers, it will generally need to do a balance sheet revaluation of those liabilities at various times during the year. To do that, we set the revaluation balance indicator under the account to a tick to show that revaluation is required. It can also, of course, apply to a foreign currency bank account, as we have here with a US dollar bank account. Again, here we look at a customer and see that we have it set, and for various odd suppliers throughout the system we have it set. Here supplier 1 and 2. So put a tick here and you will get a currency revaluation when you run that ledger option. Now we will look at currency exchange rates, and these can be entered either manually by adding a record and setting exchange rate, or we can go out to the internet and pull down a rate, as we have just done here. Now if we look at a trial balance for this company, we can see that we have various odd euro balances. These are P&L items, and so we don't really want to revalue those unless our standard requires it, but for things like VAT and customer accounts we certainly do. So now we take the ledger currency revaluation, set the date that we're going to use, and here are the exchange rates that will currently apply, and we can say whether we want it on balances, or if your accounting standard requires it and your accounts are set up, to do revaluation movements by putting the tick here, you can see that we can do a revaluation of movements, and that's generally on profit and loss accounts. Here we're just going to stick to balance sheet accounts. We can give it a transaction date, and basically you just click the post, it goes off and calculates the balance that is held in the ledger at the foreign currency and its existing rate, and converts it to the current rate ruling on the balance sheet date. So if we look here, we can see that we have two items, one for customer 6, one for customer 7, giving us a revaluation adjustment, and it tells you how much is in euros here, or the foreign currency is being revalued, and at what rate it is being revalued to, and what it was held at, so that there's an analysis to support the adjustment journal.